Sensex Nifty snapped a 4-day winning streak. Financial services, oil and gas stocks dragged, broader markets outperform. Most sectoral indices barring FMCG, auto in the red. Oil and gas emerges as a top loser. And oil marketing companies see profit booking after a surge yesterday. Speculation of a retail fuel price cut weighs on the stocks. Tata Coffee and Tata Consumer shares surged to life highs after announcing the effective date of the merger as 1st of January. And Kalpatru Projects gains over 8% on winning international orders worth 3,244 crore rupees. This is Samina Nalwala and you're watching the F&O Show. We've got Agam standing by with more details in the market. Agam, markets are taking a break on the very last day of trading this year?
They certainly are, Samina, and that's how things are panning out as far as your index futures go. So let's quickly pull up what's happening in the futures and options space. As far as your January futures go, we're looking at a near 3% increase in open interest, even as the Nifty corrects by 0.25%. And as far as the Bank Nifty is concerned, let's pull that up as well in terms, take a look at where the open interest has changed. We have still looking at another 4% added there as well. Just because the indices are lower, it doesn't necessarily mean that at the moment we are seeing fresh shorts. There certainly is a lot of position building, but we are very early on in this series. Let's talk a little bit about your open interest as well. And for now, at least as far as January goes, in terms of the Nifty, we're continuing to see open interest being built, maximum OI at around 21,500 put. And on the higher end, the 22,000 call is the one with the maximum open interest. A lot of traders are of the opinion that 22,000 may serve as a near-term resistance on the upside as far as the Nifty is concerned. And that said, we are looking at a little more writing as far as the 21,900 and the 22,000 calls and puts are concerned in today's day of trade. We'll continue to keep an eye on some of these trades as we move into trade. On the whole, however, we're looking at a slight bit of profit booking at least earlier on in the session today, Samina.
Thanks for that, Agam. It could be a day of profit taking, but I don't think the bulls are complaining either after a stellar performance that we've seen so far. Well, another new listing on the street, 30-odd% is what the street was expecting, but Innova CapTab has opened up the gap of 13%. We did catch up with the management of Innova CapTab. Let's go across and hear out his plans for the future.
It's a 320 crore primary fundraising. Out of that, 200 to 225 crore will be repayment of debt, and rest will be incremental working capital and GCP.
And with respect to your three segments of business, which will be growth drivers, and do you need to increase the capacity for the same?
So you see, we are operating in the three vertical, like CDMO, on marketing, and then the export business. And over and above that, recently we have acquired Seron Biomedicine, and we are doing a 350 crore project in Jammu. So that will be our main growth driver. That Seron acquisition is being done on the last day of the first quarter. P&L will start consolidating from the second quarter. And Jammu, we are investing 350 crore. That is backed with the strong, solid fiscal benefits as well. So that revenue will also flowing. The operation will start in the next fiscal year.
What is your current utilization, and at peak of how much revenue are you targeting in the next, let's say, FY25?
Yeah, so in our Baddi facility, if you see, we are operating at 45-50% of the capacity. Recently, we have done one capex in Baddi facility as well. So that was in 2021. So that there we are operating at 45-50% capacity. Similarly, our acquired asset of Seron Biomedicine is also operating at 45-50% of the capacity.
Right. You talked about the Sharon acquisition. You acquired it from, it was going through a CIRP, and you acquired it after that. What are the synergies that you're seeing from this acquisition, and how do you plan to take it forward?
Yeah, so like we are having our most of the revenue coming from the domestic market and the ROW market. Whereas in case of Ceron, if you see like it's a UK MHRA approved facility, and most of the revenue is coming from the developed market like Canada, UK, Australia. So there is like a perfect synergy between us. We are extending our geographical position across the globe, and we have the few common customer, and we are onboarding the customer like Ceron customers in Innova and Innova's customer in the Ceron. So we look at a very good synergy between both the companies.
Well, that's Innova CapTab talking about its current orders, the outlook for the company. The stock getting a pretty warm welcome on a day that's quiet for the markets, 15% higher on Innova CapTab. We're now joined by Aamar Deo Singh, Head Advisory, Angel One, and Ruchit Jain, CMT Lead Research Analyst at 5paisa. Morning, gentlemen. Thanks for joining us on the very last trading day of the year. It's a pleasure to have both of you here. I'll start with you, Ruchit. How are you feeling about the markets? December's turned out to be yet another stellar series for the markets. Nifty, Bank Nifty, both of them have managed to close at new highs. Start with the Nifty first, Ruchit. What is the strategy that you would be adopting on the Nifty?
Yeah, hi, very good morning, Samina. Well, if we look at the markets, there is no doubt about the trend for the market, which has been positive since last few months. I think the main reason for the December outperformance was the FIS buying. They were buyers not only in the cash segment, but also in the index future segment. They started the December series with a long short ratio around 36% and ended around 64-65%. I think that long formations consistently throughout the December series led to that up move in the markets, what we have seen. Now, going ahead, I think although there is no change in the trend for the market, but that long short ratio from the FIs is now already around 70%. They are starting with a long positions of about 70% in the index future segment. And historically, if you look at last 1.5 years, then whenever these positions go in the ratio of 70 to 75%, then we could see, we have seen some profit booking from high levels. So although the trend remains positive, but we are turning a bit cautious on the market, not going short in the markets to be clear. But yes, at higher levels, technical retracements are coming around 22,000 to 22,100. So ideally, I think in near term, we would see an up move towards that 22,000 mark in January series at the start of Jan series itself. But around 22,000 to 22,200 range, I think ideally that would be good levels where some profit booking could be done. So if one is looking from a very short-term trading perspective, irrespective of today's decline, the broader trend remains positive. Look this dips as a buying opportunity for potential targets around 22,000, and I think those would be the levels in the Jan series where one should look for profit booking whenever it comes.
Okay, Aamar, good morning to you as well. Are your observations the same? How are you playing the Nifty specifically?
Yeah, I would say a very good morning to you. So we've been bullish on the Nifty because see what we've seen is that we did see some sharp correction and then again a very sharp pullback. But what we need to remember is that the overall trend remains in favor of the bulls that I've been saying for quite some time in spite of the correction. But yes, on the daily charts, what we are witnessing right now is some sort of decline in momentum, what we witnessed over the last few trading sessions, but that's but logical. And also what we are seeing as per the derivative data yesterday, we had short covering because see what's happening is that the ferocity of the rise has really caught the bears unaware. So that really has led to a lot of short covering happening and also some short build-up happening at the current levels. But overall, the most important thing is that there is no sign of trend change as of today. So the trend remains extremely strong and positive on the long-term charts, on the intermediate-term trend. From a short-term trend perspective, here we are seeing some sort of a decline in momentum, but that's just part and parcel of the markets. So I would say as far as levels to watch out for Nifty, any correction should be used as a buying opportunity. A very strong support for Nifty comes around 21,500, 550 zone. That's a very strong support zone. On the upside, the immediate level of resistance is around 21,780 to 21,800.
Ruchit, how are you going to approach Bank Nifty after largely being an underperformer for most part of the year? It finally got itself together in the December series and had a pretty stellar performance. Of course, what we did see was there was selective buying that happened on Bank Nifty yesterday. As we go into a brand new series, what would be the approach? Would you strategically consider going long on Bank Nifty?
So I'll first look at the components, because the large part of underperformance which was seen in this calendar year was mainly because the large cap stocks were not moving. You look at stocks such as SDFC Bank, Axis Bank, ICICI Bank, Kotak Bank, they had seen a decent underperformance, due to which the Bank Nifty was underperforming. But if you look at the December series, then altogether it's different from what we have seen earlier. A good amount of long positions were formed in these large cap names, and even Bank Nifty, registered all-time high. So a renewed buying interest has been seen. The time when the FIs started buying in the cash segment, we can see that since that time the banking stocks have started moving higher. So Bank Nifty index also as of now looks positive. There are no negative signs for that. Some sort of pullback move could be seen in the range of 48,000 to 47,700. Ideally, that's where short-term supports are placed for Bank Nifty. So I would advise taking a buy and dip approach, because if I look at these large cap names, then SDFC Bank still looks stronger and could be poised for a decent up move in the short term. So buy and dip approach should be kept. 48,000 to 47,700 ideally should be the range where long positions should be formed in banking index as well.
Right. And Aamar, do you expect the Bank Nifty to outperform, underperform, or move in tandem with the Nifty?
Yeah, I would say that if we look at Bank Nifty earlier, Bank Nifty wasn't moving as per the strength what we were witnessing in Nifty, because primarily that was more on the back of the IT pack, TCS and Infosys, the heavyweights, they were contributing significantly. But as Ruchit pointed out, we've seen some very strong up move in HDFC Bank. So that's because it reached a major zone of resistance around, earlier it was the 1570, 1600 zone. So that was taken out, and the stock continues to remain very strong. Currently it's around 1700 odd levels. So if we go back in time and see, so it had earlier made a high of 1757. So that's a level to watch out for. But looking at the weekly charts, there the momentum continues to be very strong for HDFC Bank, which has got a significant weightage. If I look at the other banks, if I look at ICICI Bank, for example, so ICICI Bank, we are seeing some sort of consolidation. It's not able to breach. So the levels to watch out for is 1750, 1760 on the upside for HDFC Bank. That's a zone of strong resistance. If I look at ICICI Bank again, which has a significant weightage, that has got a zone of resistance around 1040, 50. So these are two major banks in the private sector, which definitely one needs to watch out for. If these levels are taken out, then we are headed significantly higher. Otherwise, we could witness some consolidation.
Right. Gentlemen, stay with us. We'll take a quick break. We'll come back and continue our conversation.
Welcome back to the F&O Show, and we shift focus to all the trading ideas that our experts have for us. Aamar, I'll start with you. You have a view on RBL Bank and L&T Finance?
That's correct. If I look at RBL Bank, what we've seen is that the stock broke out of a consolidation zone. It was earlier unable to reach the 240, 260 zone. Currently, it's around 276 odd levels. And looking at the long-term charts, the stock has broken out of major zone of resistance. So earlier it was, as I said, 240, 250. That was a zone of resistance. Currently, it's around 276. So it appears that the long-term trend for the stock has definitely changed because the stock had witnessed a massive correction from almost 700 levels to 100 levels. Currently, it's around 276. So this is one stock one can look at. At the current levels, one can look at buying with a stop loss below 263 and a target of 313 on the upside. And the second stock to look at is again from the finance space, and that is L&T Finance. This stock is trading at record highs. The stock continues to display very strong bullish momentum on the medium term as well as the long term charts. Even on the short term charts, it did witness a correction. And then the stock has rallied. Currently, it's around 164 odd levels. So this is one stock one can look at. Any pullback towards 160 to 163, that's a good level to enter with a stop loss of 155 and a target of 176 on the upside.
Right, those are picks coming in from Aamar. Ruchit, what about you? What are your strategies that you're recommending this morning? I believe there's a buy call on the likes of DVs.
Yes, so first is would be a buy call in DV. So primarily if you look at the positional chart since last one and a half year, the stock has seen some consolidation where on any kind of pullback moves, 3900 was acting as a resistance. Now yesterday we witnessed a breakout above that resistance level. So we are expecting a good catch-up momentum in the January series. So option traders can go long on 4,000 call option, which is right now available around 140 rupees. Keep stop loss below 106 and expect targets around 210. It's good to buy in cash segment too if anyone is looking for a holding period of about a month or so. And my second pick is a buy call in Samvardhana Motherson. Purely based on data, if you look at today's move, then price up move about 3.5% has been supported by increase in open interest of about 15%. So clear long formations are there in this stock. Cash market volumes are also good post the recent consolidation. So I think Samvardhana Motherson can do well in the near term based on the data and charts. So one can go long over here as well. Stop should be below 97.50 for potential targets around 107 to 108.
Okay, and now taking on to some questions with respect to what we can expect from January now. Remember that we are heading into a month where we'll start seeing markets factoring into major fundamental events. One, of course, is the earnings. We start off with early earnings from the information technology sector, and the other one is the interim budget. And I mentioned interim because this, of course, is going to be largely we're not going to see too many large announcements as far as this budget is concerned because we will have a bigger one after the elections later on in the year. That said, we may still see some significance with respect to both these aspects, and hence we may also see an increase in volatility, which will of course be largely on account of increase in premiums, option premiums. The question really is, Aamar, how are you seeing January option premiums at the moment, with the expectation that we can perhaps expect an increase in these premiums going forward? How would you address this specific issue, and how would you strategize? One, would you in fact play a direction neutral strategy in this case? And if not, how else would you in fact play this increase, this potential increase in premiums going forward into the next few weeks?
So looking at the premiums, the first indicator comes from the India VIX. So what we are seeing is that earlier India VIX, which was in the range of 11, 12, now that's moved up higher, and now the range is being set around 14, 16 zone. So that tells me that overall premiums are definitely going to get impacted. Having said that, if I look at the major indices, the major indices continue to be in an uptrend, but the derivatives data and the daily charts point towards some sort of consolidation happening. So it could be a range play because the up move has been very sharp, and I would say all the weak shorts have also been, not only the weak shorts, even the strong shorts, many of them would have got really out of the market because they wouldn't be expecting such sort of move. So looking at the, I would say India VIX, which is currently around 15, I would say I would keep a watch on it, because if it starts sustaining above 17, 18, then there could be, I would say, increased volatility, and they could witness some selling pressure in the markets, which is not happening right now. So it could be more of a consolidation, but with a positive bias as of now. So if I were to trade, I would trade from the long side.
Right. Ruchit, you want to come in on this too? I mean, how are you viewing the markets in context of all the events that have lined up? You've got the budget, but more importantly, you've got earnings season as well. And seasonally, we've seen that January usually is a weak month for the markets. At least that's what we've seen over the last 7 out of 10 Januaries. This time, even more so, because we're coming out of a very solid December and a very good year for the markets. How do you feel about this? And also, if there would be any sort of calls you'd be taking, not just on the Nifty, but any other sectors, because the last couple of weeks again have been about sectoral rotation.
So I think, yes, ideally, we have already seen a good December month. And as I said earlier also at the start, that whenever FIs have about 70 to 75% long short ratio, those are the levels from where we usually witness some profit booking. So I think we could see some more up move about 300, 400 points from current levels, but from higher sales levels, 22,000, 22,100 ideally, those would be the levels from where we are expecting some sort of profit booking in the markets in the January series. Now, seasonally weak month, yes, it's there 7 out of 10 times, it's not done well, but we are not expecting any kind of sharp decline in the markets too. I think there would be some pockets which would witness profit booking from high levels, especially those which have already done, which are already overbought. Maybe some of the mid cap and the small cap space, if I am referring to, there we would witness some sort of profit booking. But some larger names, if you look at FMCG sector, that is expected to do well. Selective pharma names are expected to do well. IT, it has come out of a long consolidation phase, and the kind of buying interest that we have seen in many of the large cap IT names post the recent announcements, of probable rate cuts by Fed in 2024. So I think selective IT names would do well. So some pockets would do well, and some pockets from mid caps in the small cap basket could witness profit booking in the January month. So we are not expecting any kind of sharp decline in the indices, but I think it would be more of a sectoral rotation which would happen, and hence short-term traders need to see which sectors to be in and from which sectors they need to book profits.
Okay, so that's the view coming in as far as the January series, and the approach to it is concerned considering the events lined up. But on that note, we're out of time on the show, so I'm going to take a moment to thank both our experts, Ruchit and Aamar, for joining us and taking us through their views on the markets. And with that, it's a wrap on the F&O Show, but lots more lined up on the other side. Stay tuned to NDTV Profit.